Hey everyone, Evan Kaufman again here, your VA loan originator. Thanks for joining us today for our VA loan crash course. We like to hold it every month, typically around that third-ish Thursday of the month, to make sure we give you a good idea about the VA loan, and we talk on understanding everything you need to know almost in 15 minutes. So let's let people load in for a quick second, and I'll just give you a brief background on myself. So this is a VA loan crash course, almost everything you need to know in about 15 minutes. My name is Evan Kaufman. As we see on this next slide here, I like to say your VA loan originator. Slide just has some nice things to show about my history for things. I've been in real estate for around 10 years, worked specifically with a lot of military families. I was in myself and had built a real estate brokerage that catered to military families. Everyone moved. Doing mortgages allows me to continue to work for all those clients. Absolutely enjoy it, and we've built a company and a business that caters specifically to active duty military moving around the country. And then, of course, we'll work for veterans, as I'm one myself, and for folks related to those families. A nice thing that you'll see here too is that this presentation, and a lot of others, this YouTube channel is loaded with hopefully good content if you're interested in learning more about a VA loan or the home buying and selling process for military families that are moving. If you go to our website, wevet.com, we got a lot of stuff as well. A lot of really good calculators. BAH calculator, that's one of the top ranked, I say in the world. I guess if you consider whatever's on Google, it's on the first page. That's a top ranking, but it really is good. We took everything that I knew while I was in the military and saw, man, that was an issue with trying to calculate BAH, with trying to calculate mortgages, with trying to find the right lender, agents, etc. And we try to help solve all that here at WeVet. So now all that said, given a minute for everyone to get loaded up and ready to go, let's get into the actual discussion in the VA loan crash course. So the objectives for today. Number one, we're going to look at the VA loan history and highlights. We'll move then to hit on some common questions. These are things that the VA loan has changed over now 80 years. We're going to talk about some of those changes that have happened. We'll go into VA loan 101. These are the big terms that you want to understand at a basic level. We'll review some scenarios. We'll talk about who qualifies and then wrap it all out with how to go win a home with the VA loan. So first, let's go ahead and look at the history and highlights of the VA loan. So the VA loan is a product of World War II. What happened is all of a sudden, all these service members were coming back from overseas after World War II, and the government was like, we got to integrate all these military dudes who are fighting, the women working at home that were here, we got to integrate them back into the economy somehow. How are we going to do that? So all of a sudden, the Service Member Readjustment Act was done in 1944. We just celebrated its 80th anniversary last year. I think we had a nice episode where I was like, it's the 80th anniversary of the VA loan. And in that act, there were a lot of cool stuff to help reintegrate veterans. The two big things that still remain today is the GI Education Bill for military members to be able to go back to school. And then what we're going to talk about today, the VA Home Loan Guarantee. And now with that, we say home loan guarantee. This is where I explain exactly what the VA loan is. A big misnomer, sometimes people assume the VA is giving people a loan. They're like, oh, the VA denied me, or the VA is giving me this loan. Really, it's a VA home loan guarantee. The VA loan is really just a guarantee, meaning kind of think of it as like an insurance policy. The VA is saying, hey, all you lenders out there, if you underwrite, meaning do your loans to a certain standard, we'll go ahead and guarantee up to 25% of the loan amount if there happen to be any losses. Now, if you're technical out there, you're watching this, you're another loan officer, you're like, well, it's not quite right. It is for most loans, and then yes, there's some nuances for like smaller loan balance and stuff, but think of it overall as the VA is guaranteeing around a quarter of the loan value if there happens to be any loss. So know that the VA doesn't actually fund the loan. They're not the ones that make the loan. They're like an insurance policy for all the lenders out there that make these VA loans. So that means that every lender treats VA loans still slightly different because they all don't quite adhere to the same guidelines that the VA issues out. And we're going to talk on that here in a minute. But just know the VA does not actually fund a loan. Now, that guarantee, though, that insurance policy allows lenders to do some special things for you, or at least it should, right? Not all lenders do the same thing, but it should. So one thing is, the VA says, hey, if we're going to guarantee these loans, you need to be able to offer 100% financing, or think of that in reverse as 0% down. So that's a big benefit that if you want to use, you can. And with that, because usually when you put little money down, there's something called mortgage insurance. There's no private mortgage insurance or no mortgage insurance premium. That's a big plus to the VA loan. If you're putting less than 20% down, you're not going to get hit with that monthly cost. And then lastly, that insurance policy should effectively lower a lender's risk, so you should see a more competitive interest rate. You don't always see that because it can heavily depend on who you're working with as a lender, but trust me, you should see a more competitive interest rate. If your interest rate's the same as a conventional rate, there might be something off there. It should be more competitive because, again, The VA is like a blanket insurance policy for around a quarter of the loan value, which means as a lender, it reduces our risk, so it should be more competitive on the rate. So that's some of the major things it allows you to do. Now let's hit on some of the big, I say, common questions, misnomers, because remember, the VA loan is over 80 years old. It has changed over that time, all for the better, I would argue. So some of these things we're going to hit on, they're quick, rapid yes-no answers, because some of these things in the past might have been answered differently. So we're going to clear them all up for you right now. Let's look up first. Can I use my VA loan more than once? Yes, you certainly can. That usually leads to, can I have multiple active VA loans? Certainly. We have folks with 3, even 4 outstanding VA loans. Does the VA loan benefit expire? It does not. Does the VA loan have a size limit? Thanks to a big change in 2020, no, there is no size limit. Does the service-connected disability affect my VA home loan? Yes, it does, and we're going to hit on that here in a few minutes. Can I use my VA loan while on active duty? Believe it or not, our niche is active duty military, and a lot of folks sometimes will, well, what's a VA? It's veterans. No. Good news, active duty can certainly use a VA loan, and that is the majority of our business. Can National Guards or Reserve service members use a VA loan? Yes, certainly. So here's a recap, some of those questions and a couple others. Know that we got a lot of this good stuff. Again, if you go to our website, you can see a lot of good misnomers, myths, that kind of stuff being answered about the VA loan. But that hit on, I know, a lot of the major ones, which over the last 80 years might have been answered differently depending on when you were working with the VA loan. So hopefully that helps clear some of that up. Now let's go look at the major terminology for the VA loan. We have a VA loan masterclass that's a little bit longer. It's half an hour, a little over half an hour, where I hit on some other major terms. But these are 3 terms you really want to understand. I would say if you're going out to buy a home for the first time and we're not your lender for some reason, you can at least sound intelligent when you're working with your lender, working with your agent, that you want to know. So number 1, the VA mandatory funding fee. What is this? It's a one-time charge paid directly at closing to the VA. So the VA charges you this at closing. It's the same no matter who you're working with as a lender, and it's a one-time charge at closing. And it's paid in 3 different ways. It can be paid by the buyer at closing, the seller at closing, or what most folks default to, rolling it into the loan balance. So effectively the buyer paying for it and rolling it into the loan. If you hear people say, oh, hey, your closing costs can be rolled into the loan on a VA loan, typically the one true cost that can be rolled in is the VA funding fee. Other costs can be rolled in a somewhat different way. That's another video that we have for stuff. You can look for that or reach out and ask me how that works. But the one fee you can technically roll into the VA loan is the VA loan funding fee. And if you're wondering how much that is, we'll look on the next slide here, and there's a nice graph. Right out the gate though, know this, if you're watching, you got 10% or greater VA disability compensation, this is what we were talking about earlier where it can make a difference, you ignore this whole slide because there is no VA funding fee for you. If you have VA disability comp, you're in good shape, we can get that fee waived for you, the VA doesn't charge it. If you aren't, then there's kind of a grid here where you can see that it depends on your down payment, your use, and type of VA loan. So for example, a lot of folks that we might work with are just getting out of, say, graduating an academy, getting out of tech school of some kind, they're going, it's their first use of the VA loan. If you do 0% down there, the fee is 2.15% of the loan balance. Now, if you put some money down, and this is where we're actually huge proponents of putting at least 5% down on a VA loan. If you can't get there the first time, the VA doesn't punish you too hard. That fee isn't too much more. But on your second, third, fourth purchase with the VA loan, you ideally want to get to that 5% down mark because if you notice in the columns, subsequent use, that means every use after your first. If you do 0% down on after your first use, that VA funding fee jumps up to 3.3. But notice, if you still put that 5% down, the VA pulls that funding fee back to 1.5%. You can make a really big return on your money on your future use VA loans if you can get to that 5% down mark. And the VA incentivizes that. Now notice though too, that for the IRRRL that you see on there, in the left, loan type, it changes. And this is big right now, especially as interest rates have been bouncing all over. When rates come down, bam, we're able to quickly refinance our clients who were higher before. And as they keep moving, we're always looking for that. So IRRRLs have become really big in the last year. And that's that ability to do a streamlined refinance, no appraisal, no income documentation. We just need to do a soft check to make sure you haven't missed a payment for everything. They're amazing. It's one of the big things of when you work with us. We have a proprietary system literally to track that and notify everybody and all parties so we can make sure we get it done for you instant when there's the opportunity to do them. We love it. It's big with our client 20-year vision. Whole nother video gets me off track. We just want to see our folks reduce that payment so they can increase their future financial security. And I'll stop talking from there for it so we can make sure we keep this at 15 minutes. But notice that the VA funding fee drops for that. It's a lot less. It's 0.5%. And again, If you have that VA disability compensation, all this is pointless, so don't have to worry about it. But know that that's how it's impacted. Now next, certificate of eligibility. This is where I like to say, hey, in a VA loan, there's eligibility and there's qualification. Eligibility is, will the VA guarantee a loan for me? Qualification is, hey, will the lender accept my credit, my income, my debts? So two different ball games. You need eligibility to go ahead and even have a chance at qualifying. So the certificate of eligibility is that most important document. It is the one, sometimes 2-page document that the VA issues for you that says you are good to go or not good to go, or if there's any issues, it puts it all on a sheet. It's got a little grid, it's got words all over it. We can read them really quickly. This is a document that you should be able to get for free, by the way. We should not be charged for this in any way. And if you're working with lenders who definitely work with a lot of VA loans, we pull that directly for you so you didn't have to deal with it. And we'll be able to check that and let you know if there's any issues. The key is you want this checked at the very start of your loan process. When you're getting pre-approved for a loan, getting qualified with a lender, making sure you have the right income, etc., you need to make sure this is done. The shorthand name for this is COE. So if you're wanting to sound intelligent, you want to make sure to ask, how does my certificate of eligibility look? Can you help get my COE? If someone can't get your COE, then that is a red flag right there in itself. But your certificate of eligibility is an important document that you need to get because it will tell you if you have any issues of eligibility for the VA loan. And then once you're eligible, you can go ahead and work on qualification. Now, let's move next to understanding the property types that you can use for the VA loan. Green and red here. Basics of R, think of this. The VA loan can be used for pretty much any property as long as it's going to be your primary residence. So you see on the green sheet there, that's single family home, condo, townhome, multifamily units, it's 2 to 4 unit homes, mobile manufactured home, and new construction, right? New construction, that's one of those things sometimes people say, oh, the VA, I can't do new construction. Well, that comes down to the lender. Some lenders will do new construction, some won't. Some will work on mobile manufactured homes, some won't. The VA, though, will allow all those as long as they're your primary residence. There's some caveats to some of those, but they'll allow you to do those all for the most part. Where the VA loan is not eligible, commercial property, raw land, undeveloped lots, investment homes. Think of it as if you're not going to live there immediately or in the very near future, because of those new construction homes, you can technically build it and then move into it. If it's for investment purposes or you're not going to really live there, then it's not going to work. So the VA loan has to be used, just think in your mind, as a primary residence, somewhere I'm going to live. Now, that hits our big 101, right? You understand what the fee is, you understand your certificate of eligibility, and it's a smart form to always talk about and ask about, so that makes you sound really intelligent about it. And then we touch on what you can and can't use with a VA loan. So let's compare a VA loan to a conventional loan. Here's a nice chart that shows an example that we had now. This is getting a little older, maybe a year and a half ago, but it's a real example that we had pulled back at the time to compare a VA loan, because it was a nice easy number, a $500,000 loan, the difference between the two. So you'll notice a VA loan right out the gate has that significantly better interest rate. And here, I usually say, hey, it's generally anywhere from 0.5% to 1.5%. Just kind of depends on the day. Here it's 0.875, kind of right in that middle mark. So with that significantly lower interest rate, you'll notice that even though you have a larger loan balance because you put 0% down versus did the 5% down, your monthly payment is lower than a conventional loan. And on top of that, the conventional loan has that private mortgage insurance. VA loans don't have that. So the monthly payment is less, even though the loan balance is slightly higher because the interest rate's a lot more competitive on the VA loan, and you don't have that monthly dinger for mortgage insurance. Now we added all those up over 10 years. Why 10 years? 30 would make it look really good because a mortgage is 30 years, but the reality is folks are moving sooner than 30 years. Like a lot of our military clients are, moving around every 5-7 years, give or take. So we did that 10-year mark because that's a realistic hold period out there. When you add up the mortgage insurance saved, the additional interest, not having to put the down payment for everything, that ends up being $86,000 and some change that you didn't have to spend if you did the VA loan versus a conventional loan. Good investor clients of ours have pointed out, hey, you take that money and invest it, it could be a lot more. And I'm like, yeah, I agree with that. I just do what's like, hey, a for certain return. That's for certain right there. That's your savings. That's real savings. If you invested that and compounded it, great. It's only gravy on top. Point is, there's a big difference between the two loan types. Now, I will say there are some scenarios where the conventional loan can be very competitive with the VA loan. And that's typically when you have 3 scenarios that work out for you. You have 800 plus credit score, or 780 plus really now, because it's now the highest bracket for conventional world since everything changed about a year and a half ago. You're putting 20-25% down because you hit the highest bracket that you can for down payment, and you're subject to the VA funding fee, meaning you have to pay it. If all those three are true, the conventional can sometimes be very competitive. Or if it's a 15-year conventional loan and a 15-year VA loan, those can be pretty darn close too. So we just have to run that scenario. And good news is we can do both those and compare them side by side for you to show you. Just know that about 90%, maybe 95% of scenarios, VA loan's going to edge out that conventional in most cases, especially if you got the VA disability compensation. And the kicker between both of them, if they were equal anyways, remember that VA loan, I mentioned that streamlined refinance, no appraisal, no income documentation. Really cool feature of the VA loan. Conventional doesn't have that. So that's a feature that's really neat to have that EARL, that interest rate reduction or finance loan. That's, if anything, that's like the ultimate kicker to do a VA loan versus a conventional loan. Now, let's talk about who qualifies. You kind of heard the hints throughout this. The VA doesn't actually do the loan. It's on the lenders. So the VA tasks the lender with actually evaluating clients or borrowers and making sure we're going to lend the money. So that means that every lender evaluates risk slightly different. So in the end, you got thousands of different loan types effectively because every lender is going to view things slightly differently. Examples of that, hey, what's a good credit score? I got denied, or sometimes people will be like, I got denied because of my credit. Well, was it really the VA or was it the lender? Because VA doesn't really care too much about credit. It's generally going to be a lender requirement that's on there. Same with I could use this income or I couldn't use this income type. That's generally going to be a lender, what they call overlay restriction, than an actual VA one. So it's important to make sure you work with the lender ultimately who gets it, which is our final slide that I just spoiled of how to win a home with a VA loan. It wraps out with work with a lender who gets it. As I always like to say, sometimes people will shy away from the VA loan, especially a lot of lenders, because they're different. But I think people confuse difficult with different. Sometimes folks are like, well, it won't work. It has problems. They're afraid because they think it's difficult. The VA loan's not difficult. It's just different. And so you want to work. There are plenty of companies out there. We're one of those that understands it and works with it all the time. So I'd love the opportunity to work for you one way or the other, but I hope this was worthwhile in some way for you either way. And that's where we round all this out. Next steps, if you'd like to work on VA loan or just learn more, you can see here on the slide. Number one, if you're interested in a VA loan, you can go on the QR code or the website, which is weavet.com/get started. We can get you taken care of and started right away. I'll be your loan officer. I'll take care of you. My team here will get it rolling, but you'll actually work with me directly as well. If you need help with a real estate agent, for example, we have a sister company, Weavet Realty, that helps connect people with military-focused real estate agents as well that understand VA loans. There's a link for that. And then lastly, this kind of material, putting out this presentation, and we have a boatload of other ones. Just go to our resources pages and you'll get a lot of good stuff there. There's also some good downloads, some good calculators. And I'd like to say, hey, most sites just throw whatever they can out there. These are good calculators. At least rankings that are used and views and uses that we get are high. It's not like it's just a random off-site that's out there. It's really cool to see these tools now used and shared and put in different places. They're there for you on the resources tab. And always feel free to reach out with any questions. Happy to help you. My name again is Evan Kaufman, your VA loan originator. Hope you enjoy this talk. And if you want to stick around for a little bit longer, we're going to have our monthly unique webinar, which this month is going to be buying a home from overseas. See what I mean? It's one of those weird things that really active duty military have to face. And that's what we're going to talk about. Buying a home from overseas, how to get ready for that process, what to expect, and how to be ready for it. Thank you for tuning in. Talk to you later. Bye.